So let's start the Financial Advisory Committee meeting for the City of Albany. So I'll be chairing. Chair Trainer is not able to make the meeting. So, and before I start, I'll just, excuse me, I did this last time too, just wanted to sort of give like a time frame around all the agenda items so that we can just sort of hopefully keep it to a reasonable time frame. So my goal, again, this is just a goal. If things go later, they go later, but to get through the first few agenda items by 7:15 so that we can start the audit at around 7:15 and have about an hour for the audit and the mid-year budget review. And I understand there's a presentation on the audit. So we tend to ask a lot of questions. So if there could be, the presentation both from the city and the auditor could be in the 20-minute range or so, that would leave plenty of time for questions. And then maybe a half hour or so for the subcommittee updates if that's needed, so 10 minutes per, and then another 10 minutes for the last few things. So that's my goal, 2 hours. And again, but if there needs to be discussion that goes beyond that, that's perfectly fine. So the first agenda item is the land acknowledgement. Well, actually, first, is there introductions, or when does that happen in the agenda?
Land acknowledgement first.
Okay, land acknowledgement first. The City of Albany recognizes that we occupy the land originally protected by the Confederated Villages of Lee's John. We acknowledge the genocide that took place on these lands and must make strides to repay the moral debt that is owed to this indigenous people, specifically the Ohlone tribe. We thank them for their contributions, which have transformed our community, and we will continue to bring forth growth and unity. The City of Albany commits to sustaining ongoing relationships with the tribe and together build a better future for all that now make this their home. And with that, maybe just have an introduction for Raina.
We can certainly do that. Thank you, Chair and members of the committee. I'm Raina Schwartz, the Interim Finance Director here for your City of Albany. I'm delighted to be here. I have a surprisingly long career in local government, over 30 years, in the Sacramento area and in the San Francisco Bay Area. I was born and raised in the San Francisco Bay Area, so I'm no stranger to this area, and I also have an undergraduate degree from UC Berkeley, so this is definitely familiar territory for me. I started my career in local government in Sacramento and worked for them in a variety of capacities, from budget analyst all the way up through department head for the Department of General Services over a 24-year career. I then moved jobs to an assistant city manager position in the city of San Pablo, just next door. Was there for about 5.5 years, and then was with the city of Clayton in central Contra Costa County as the city manager, and retired from that position in February of last year. So I couldn't quite stay retired. I'm not a sit-still kind of a person, and through a strange set of coincidences, I found out about this opportunity, met with the city manager here, and we talked, and my long background in finance, in the Bay Area, in local government in general, was a good fit for the interim role that they needed while they're completing a recruitment for a permanent director. And so I came on in January, and the goal is to have a permanent director on board sometime in the May timeframe, just based on how long recruitments take. It's a tough environment to recruit for finance directors, so I'm here to assist for as long as is needed and is desired on the city's part. But I'm really enjoying kind of bringing the experiences that I've had in my other jurisdictions here, and trying to make sure that we provide support for staff and the council in all of our financial affairs as we move forward. So that's a sort of a medium length introduction. of myself and my background. And I'm really delighted to be here. Thank you.
Well, thank you very much and welcome. Are there any questions or just go on?
Well, a little clarification about how they what's the process for them choosing a finance director?
Absolutely. So the city has contracted with an executive recruitment firm, Peckham and McKinney. They do lots of local recruitments in the Bay Area, from department head up through city manager. That brochure and recruitment was launched, I think, at the beginning of February, or maybe a little bit later than that. It closes March 17th. And then there will be, the executive recruiter will screen applicants and forward to the city manager a set of recommended candidates. I would hope that we have a pool of 6 or 7 for a panel interview and then a city manager interview. So we're hoping to complete those by mid-April. And if everything goes smoothly, which is not always the case for recruitments, that's when we would hope to have someone on in May.
Who's part of the review committee?
At this point, we haven't established, it's typically a professional panel, so we would be bringing finance professionals typically from around the region. So I may sit on that panel, but we would probably have a finance director from, a couple of finance directors from other jurisdictions in the area.
Okay, thank you. So the next agenda item is the approval of the minutes.
I move that we approve the Wednesday, December 6, 2023 minutes as published.
Okay.
Second.
Okay, we have move in a second. And any discussion?
Any public
Any public comment?
comment?
Nope. And I can't see if there's anyone from the public online, but you'll let us know if there's any.
Nothing.
Okay. So, motion to approve. All in favor, say aye.
Aye.
Aye. Any abstain? Any nays? Nope. Okay, it's unanimous. Announcements? Staff and committee, any announcements?
I've covered everything I needed to cover in the intro and the follow-up question on the recruitment.
Any other announcements? Nope. Okay, public comment? Nope. Nope, okay.
I think we should reflect on the fact that there are public comments attached to the agenda. Letter.
Yes, that's right. We did receive some public comment that was attached to the agenda, and we reviewed those. And yes, thank you for those comments. Okay, let's go to item 5, the presentations. So the first one would be the fiscal year 22-23 annual comprehensive financial report.
All right. So I will start out ahead of Sheldon going into an in-depth review of the ACFR for fiscal year 2022-23. Let me get my screen shared here. So I'll just give a quick summary of the staff report and the overall results of the audit. Kind of just going through the staff report and the tables inside, starting with net position. That is covered in both Table 1 and Table 2 of the staff report. Overall, the net position increased by $14.3 million across governmental activities and business type activities. Primary driver for both activity types was investments in capital assets such as buildings, infrastructure, and equipment. The city's pension liability as of June 30, 2023 was $45.9 million according to GASB 68 standards. Again, this is discussed in brief in the staff report and in more detail in the ACFR itself. Total liability for other post-employment benefits, OPEB, for fiscal year 2022-23 was $4.8 million. These are liabilities created through benefits offered through employees that are considered unfunded and are an obligation that the city will carry. Moving on to Table 3, which gives an overview of the fund balances. Total combined governmental fund balance at year end was $36.3 million, which is an increase of $1.2 million from the prior fiscal year. Fund balance provides an overview of the financial resources available in a governmental fund. Looking at the first column, general fund, the general fund balance at the end of fiscal year 2022-23 was $11.4 million, and our general fund for the city is the primary source of funding for operations. After considering money that is earmarked for other purposes such as prepaids, a 25% reserve of current year expenditures, and covering the fiscal year 2023-24 budgeted deficit, there is $11,211 remaining of fund balance, and I did give a recap of how that number was arrived at in the staff report as well. Moving on to the final talking point, and then I'll turn it over to Sheldon. The finding for fiscal year 2022-23 is a repeat from prior audits. Staff must continue to implement internal processes to improve closing and financial reporting. There is a plan in place to work towards tightening up the closing process to avoid errors and also to allow errors to be caught in a timely fashion. That's a repeated call out, the timely discovery of errors in reporting. So overall, staff is committed to improving our processes so that this final finding can be removed on a future audit. And with that,
now it's on. Thank you for the introduction and very nice synopsis of where we're at. In regards, I'm going to start a little bit backwards and then we'll get into a little PowerPoint that we have for tonight. But the finding itself, you know, there was progress. So there have been improvements. As we move forward through the audit, we're reconciling and cleaning things up. The city has hired new people in the last year or so, I'd say, right? And I think Cassandra is one of those. And I've been directly involved with the city this year more so than I have in the past couple of years because my partner was engagement partner for those last couple of years. And I must say the team that's in-house right now has shown some really good traits and some really good strengths in terms of improving such that we can remove that finding. So I think everything's heading in the right direction. All right, so there should be some, if you hit the actual display on there, there you go. Some nice little, what do they call those? Roll-in transitions, thank you, I couldn't think of the word. All right, so we're looking at the audit for June 30, 2023. And you can go ahead and jump on to the next slide. See some of those fun transitions. So we'll start off with the audit phases. And so it's pretty basic. We have a 4-step audit process. And of course, that 4-step audit process, as you see here, is broken down into internal controls, risk assessment, right? So we have an interim audit that we come out and perform, where we're really focusing on testing controls and doing walkthroughs and narratives and updating those key controls so that we can put together our audit plan and then see if we want to change our audit plan as we move forward. And so from phase 1, we move into phase 2, which is the substantive testing, essentially the audit execution phase. And with the audit execution phase, what we're doing is focusing on the year-end balances. So the cash investments, long-term debt, capital assets, accounts payable, receivables, revenue, and expenditures, right? Pensions, OPEB, a lot of work goes into that. And then we're adding in compliance. So the federal compliance requirement is a pretty big area to cover for a local government. So with the city, we did also have to apply procedures that follow uniform guidance for their major programs. Now, once we get through those different phases of the audit, we get to the reporting phase. Essentially, that's providing the act for, preparing the act for follow-up, cleanup, right? Follow-up's the last phase. So the follow-up usually happens once we submit the first draft to your management team. Then they'll come back with follow-up, and we'll have some back and forth, and we'll go through the findings and see if we agree or not, right? And then there's another part to that follow-up, and that's presenting to finance commissions and then also presenting to the council, right? And so sometimes we'll get feedback from the council that goes, you know what, we might need to make a revision to the aquifer. Doesn't happen too often, but sometimes. More often with a finance committee or a finance commission, we will get feedback that goes, you know what, let's go take a look at that. We might need a revision. That happens more often, but not too often. Next slide, please. So what standards do we follow? Well, we follow generally accepted auditing standards in the United States of America. Everybody's doing that. We also follow generally accepted governmental auditing standards, right, for a local government. There's one that's not up there. I mentioned it already, uniform guidance, right? That's for the single audit. So you spend $750,000 or more in a federal awards program, uniform guidance comes into play. Now, what's the objective of the audit? Well, overall, the objective is to express an opinion on the financial statements, right? But keep in mind what a financial statement is. When you're looking at the aquifer, right, the annual comprehensive financial report, you actually have two sets of financial statements, or 3, or 4. In your particular case, you actually have 4. Now, within those financial statements, there's multiple opinion units. So we're actually expressing opinions on each opinion unit. So that includes the government-wide financial statements, right? The statement of net position and the statement of activities. That also includes your governmental fund financial statements. Then we add in the proprietary funds, the business type activities. Then we add in your fiduciary type funds. And so we have opinions that are specifically related to each of those, right? With that being said, what's the responsibility of an auditor in expressing those opinions? Well, first and foremost, we do it within a reasonable assurance, not an absolute assurance. So keep that in mind. So when we're sampling, we're not looking at everything. We're sampling with a certain level of confidence, right? So we're looking for 90% level of confidence when we create our sample sizes. So we can't look at everything as the bottom line. So we can't give you 100% assurance, but it's a very high level of assurance. I mentioned earlier that we do our risk assessments. Well, it's a risk-based approach, thanks to Enron and WorldCom back in 2000, right? Everything changed. You can't just skip your risk assessment. You can't jump into the substantive testing. You have to look at the controls. You have to assess risk by major transaction class and coming soon by each major assertion. So that's coming soon. We already do that. So I don't know why they're changing the language.
Can I just ask about?
Sure.
Sorry. When you say risk, you're talking about the risk of misstatement, not the risk that the city, is financially doing well or not doing well.
Absolutely correct. So, and that comes into play in the next word that I have up in the presentation, which is materiality. So it's the risk of material misstatement, right? So we're letting the readers know, and this commission and the council know, whether or not we think that the financial statements are free of material misstatement. And so when we do our risk assessment, we're looking for material misstatement. So you're spot on. Okay. We do have a certain, I guess the best way to say that is requirement to look at whether or not there is a lack of going concern. So when we're doing our work, our procedures, when we're all done, we analyze that to see, okay, with all the work that we did, do we feel like the city has a lack of going concern? The key concept with that is it's a lack of going concern from 1 year of the date that we issue the report. So if it's beyond that, we have no responsibility for it. But what we're trying to say is the doors will be open 12 months from the day we issue the report. Okay, I think I covered everything on this slide. Next one, please. Just a quick overview of the aquifer. And so this is the basic structure of an aquifer. It's a step above what you might find in the Governmental Accounting Standards Board's requirement for an audit report, right? It's not required under GASB to have a Section 1. It's not required to have a Section 3. It's only required to only have that Section 2. So, but in an aquifer, it's more comprehensive, that's the name. And so just to keep in mind, we do not issue an opinion, or our opinion does not include, and we do not audit technically, the letter of transmittal, the elected officials, or the organizational chart in Section 1. And we do not include, in our opinion, the statistical data in section 3, right? Although you'll find audited information in those sections, we don't specifically say those are included in our opinion, right? We actually explicitly say they do not. So there you go. Next slide, please. Yeah, I think I did those backwards. Yeah. All right, so this is an overview of the government-wide statement of net position, right? There's a red line there, just ignore the red line. I don't know how it got there. I think I had an extra data column hidden in there. Overall, what you see here, though, probably the main thing that you might see is the non-current liabilities, right? You see that purple line that jumps up all of a sudden, that non-current liabilities, and that has to do with the pensions. And so that's the main highlight I want to take away from this slide is the pensions. The reason being is that in 2022, that fiscal year audit, pensions dropped way down. All of a sudden in 2023, you see them come way back up, right? And I say come way back up because in 21, they're about $5 million less than 23. So let me try to make some sense out of that. 2021, you had a net pension liability with CalPERS of about 33.5 million. And then in 2022, it was just under 20 million. Huge drop. 2023, now you're up around 38 million, right back up, right? The reason being, investments, mostly. So when they create these actuarial reports to determine what your required contributions are going to be, and then they come through and they create these actuarial reports to determine what the net pension liabilities are going to be, they have assumptions. And those assumptions include earnings, right? So the actual earnings in 22 were well above the assumed or the estimated earnings. The actual earnings in 2023 were well below. So you have that flip. Go ahead.
Yeah, just a quick question about other items that might be under non-current liabilities. I understand the pension is, but what else might be there?
Oh, you've got some debt in there.
So a bond would be there?
Bond would be there. You've
So if
got,
okay.
yeah, you've got something called, that's brand new this year, is a subscription-based liability or a subscription-based information technology agreement, a SABITA for short. So it's a subscription liability, if I can speak clearly. It's very small for the city, though. It's only $267,000, but that's a new standard that we implemented in 2023.
Thank you.
Yep. Next slide, please. Sam, remind me to fix those animations for next time. You might yeah, there you go. All right, so what we're looking at here is the governmental activity. So again, this is the statement of activities. This is a government-wide presentation, not the funds, not your business type activities, but just the governmental. And I think taxes are probably the biggest deal, right? It kind of jumps right off the screen. So you can see there's an uptick in taxes again. Yeah, you're just up there over that $30 million mark this for 2023, where you're somewhat below that in 2022. So you can see another uptick. So the market in terms of property taxes is still doing well, right? Here we go. COVID didn't have an impact, at least in most markets. You can also see charges for services were up a bit, but then you can see capital grants contributions were up a bit, but a little bit of a drop in operating grants. Investment earnings back up this year for 2023. When I say this year, I mean fiscal year 22-23. Uh-oh. City's not paying its bills. I saw that. Audit finding. All right, next slide, please. All right, so we looked at revenues. Now we're looking at the expenses by function. Again, government-wide presentation. This is full accrual, by the way. If you like that accounting terminology, full accrual reporting right here. And so you can see in how the expenses went. And ultimately, you're looking at an increase in your general government expenses, a drop in police expenses, a drop in fire, emergency, and medical. Community development was relatively even. Rec and community services bumped up by quite a bit, and interest and fiscal charges were fairly consistent. Now, with that being said, you have to keep in mind what we're looking at here is adjusted for pensions, right? So those fluctuations in those pensions impact these numbers big time, right? And when I say big time, I should say something more official, like significantly. The thing about that is it's difficult to project and estimate what those PERS assumptions are going to do to your government-wide presentation, right? The one thing that a city can control, or any local government, is what the annual required contributions are going to do to your fund balance. You can't control the annual required contributions themselves, but you can project out. You have enough information from CalPERS to say, okay, here's where we're going to be in 3, possibly 5 years on our contributions, and that's the impact it's going to have on our fund balance. But you're not going to really be able to go, okay, here's our unfunded pension liability. Oh, wait a minute, it just dropped by 12 million. Oh, wait a minute, it just went up by 15 million. Very difficult to estimate where you're going to be with those types of fluctuations. Next slide, please. Audit results. All right, so this one should work. Almost. That's all right, we can see them all. It's supposed to be more dramatic. Unmodified opinions. So we did, I don't know if I talked about whether or not the opinions were modified. No, I didn't. Okay. So what we're looking at, and the most important thing, is that we don't have any modifications to the opinion letters, right? So we talked about the different standards that we go through to issue these opinions. And we talk about all the work that goes into it. And so we've got opinions over multiple opinion units, over different financial statements essentially combined into one, and there's no modifications in the opinion. So what does that mean, right? So that means that we believe, as an audit firm, that the financial statements are free of material misstatement as of June 30, 2023. So now, mind you, you didn't have any material weaknesses that we found in the audit, but you did have some significant deficiencies, right? How close were those to a material weakness? Not so close. I'd say in prior years, if we would have seen those go a different direction, get worse instead of getting better, then maybe we would have considered a material weakness finding. But when we sat down and we looked at this, our overall conclusion based on the evidence that we were able to see was that there's improvements in the controls. The closing's getting better. And I feel like with the team and the way things are going right now, that from what I have seen, you're going to probably see those findings drop off next year. But we'll find out when we come out for the interim audit, right? So, and that's going to give us a really good kickstart as to what's going to happen in the fiscal year 24. So, unmodified opinions with a significant deficiency finding, not so bad, not so bad. Heading in the right direction. So with that, I'll leave it open to any more questions or comments that you might have.
Okay, thank you very much. I really appreciate it, and appreciate you coming here so that we can ask you questions. So we could probably each ask a bazillion questions, but why don't we just start off with just a couple questions each, and if anybody wants to start. Anybody have any questions?
I'll go ahead and start.
Go for it.
You have been working with the City of Albany for the past 5 years, is that correct? Your agency?
Yeah, my firm has been for the last 5 years.
We get 6 with you?
Yeah, you can have 6 with each engagement partner,
Okay.
or with, you can either rotate engagement partners or firms. That's the government code law.
Got it.
Yeah.
Okay.
And actually, I wasn't the engagement partner the last 2 years, and I picked up halfway through this
Does that
audit.
absolve your firm from?
Well, it does, and that's the whole point of us having more than one partner at the firm, is that if clients do want to continue with us, they can do so. I just have to be off the audit for 1 year, then you can go back to me. You can choose to stick with the other partner for more years, however the management wants to go with it.
And then my follow-up question to that is that this deficiency has been on the books since 2016, I think. Is that correct?
I think
agree-
19.
19? Okay.
Yeah.
Well, it's encouraging that it's getting better, but I really want to know when it's going to go away.
I think it's going to go away this fiscal year, 24. I really do. I think you've got the people in place in your finance department to get this taken care of. In the past, when I met with my partner and we talked about it, there was always some question as to whether there was enough, know-how in the finance department to be able to actually get it to the point to where the close wouldn't have any deficiencies. But now I feel confident with the team that you have now. If Raina wanted to stick around and not retire, and I think she'd be a great replacement, for that position. So. But I'm confident that whoever you bring in, we'll see when we come out into the audit for 24. But I'm confident that with the way things are heading, you'll be able to resolve those issues.
Your comments are reassuring, and I appreciate that. I don't understand how there's any incentive to actually make them go away. I mean, what's the downside of not having those problems corrected?
Well, at some point in time, so there's always been compensating controls, right? So what we're finding are the things that could lead to a material weakness, right? So there hasn't been a material weakness yet because there's been compensating controls. So that's the thing, is at some point in time, if we don't see that improvement, you're gonna get the material weakness finding, right? And not because you had a material adjustment, but because you could have a material adjustment, right? And so that's the next level. Now, how far can we take that? Well, if we don't see improvement on that, and all of a sudden the city starts having material adjustments, well, guess what? Now you have modifications in the opinion letter. Then you have bond rating problems, right? And so that's where the impact kicks in. Unfortunately, what you're looking at there is it becomes really up to the city council to hold management to the fire on that. We just report objectively. So it's not our jobs to really do anything other than report what we see, right? So then it's really up to the city council to really say, okay, look, we need to see some improvement.
Thank you. I hope they will.
Thanks. Any other questions? No?
Yes. I heard a figure of 750,000 as you're going along. What was that for? And if you don't.
Oh, sorry, thank you. There's a rule for uniform guidance. So when you have spent $750,000 in federal awards, right, or of federal money, then you're required to undergo an additional scope in the audit, which is called a single audit or a uniform guidance audit. And essentially, so, with the city, you could have one program that puts you over that 750,000, or you could have 5 programs or 10 programs, and then we have to come in and assess which program is a major program under criteria and guidance given to us, and then audit that program. Yeah.
And how much does this audit cost?
It's already included. It's about, I think it was $5,000 for June 30, 2023.
It was what?
$5,000 to do that single audit, yeah. It was included in our fee
For this whole year?
for the whole year, yeah, because it's
5,000?
that's it, yep. It's part of the city audit.
Sounds,
The single audit is 5,000.
Right.
The overall audit cost is about 45,000.
Correct, yeah.
I don't know what the difference is between a single.
So the single audit is just those federal funds that is a very little narrow piece if you've got that level of expenditure of federal funds. The overall audit is everything you've heard this evening, and that is about 45,000.
Thank you. Now, you showed a graph in the presentation that, going up and down about the pensions.
Partly, yeah.
And I didn't see that in the management discussion and analysis.
There's 2 tables, actually, there's 2 or 1. There's 1 table in a management discussion and analysis that will cover that. Table 1 covers those numbers. So that summary I provided was just for the PowerPoint, but it's from that table.
Okay.
Yeah.
And so your company's been auditing us for 5 years. This is the 5th year.
That's correct.
Correct?
Yeah.
So you seem to say that the fluctuation for the debt that we have, unfunded debt, and now I'm hearing more wording. So there's unfunded pension liability. There's unfunded actuarial liability. There's non-current liabilities. What's the difference?
All right, so a net pension liability is the correct term we use for the ACFR. Unfunded actuarial liability is an actuarial term. So you'll sometimes get those intermixed, right? But if you really want to know what the true pension liability is, you go with the term net pension liability.
Net.
Yep. The net pension liability is a non-current liability for the city. So it's a category, right? It includes your net pension liability.
And that liability is what we owe to pensioners that we don't have invested.
Yeah, essentially, because it's the net pension liability, right? The fiduciary, the equity is set aside. So the investments are set aside. And so with all the pooled investments there, this is the remaining liability. This is what will need to be paid over a 30-year period per se. Yeah.
So have you seen a trend over the 5-year period that you have been auditing us regarding the pension liability that is worrisome, assuring, or neutral?
Worrisome.
What's worrisome about
It's
it?
going up every single year except for one. But if you look at that 5-year average, it's trending up. Go ahead. Like I said, please do, let me finish this one point. The only thing the main thing that concerns me is the lack of control that local governments have over the net pension liability being a part of that pooled plan. So whatever happens to California happens to you. It just gets shared and allocated, which is the point of the pool. It's a shared risk, right? But it's no control. So cash flows is really difficult to judge when you're looking at that. So you're limited on how far out you can really plan. So that's my concern.
And if I could add just kind of a little bit of context just from the local government, not purely the auditing side. Albany is very typical for jurisdictions in the state, particularly smaller jurisdictions, which are part of a CalPERS pool. Larger jurisdictions will have their own sort of pool, they're just themselves, but we're lumped in with lots and lots of other jurisdictions. And so what Albany faces is exactly what Clayton faced, it's exactly what San Pablo faced. It's small cities up and down the state are really struggling because of the three-legged stool that makes up CalPERS funding, employee contributions, investment earnings, and then the third leg is the employer contribution. The way CalPERS does their calculations, the balancer is always the employer contribution unless we reach some agreement with our unions that allow us to do additional cost sharing. But by and large, the balancer is always local government. CalPERS doesn't ever balance out, it's just whatever the market earnings are. And then the employee contributions. And so this pension liability is in large part uncontrollable based on all of the pensions that have been agreed to date. We've got to pay that going out in the future, and individual cities don't have any control per se over what that's going to look like based on the market. And so it's worrisome, it's growing, all of those comments are true, but I do want to reinforce that that's not something that Albany has done. It's not unique to Albany. It is true of almost every city in the state. Albany's about average in terms of where it lands in terms of the percentage funded that our future pensions are. It's terrifying for local government finance professionals, but it's not unique.
And where does Albany lie? You said the liabilities is average, but where do we lie in terms of the overall strength of our finances? Are we average? Are we above average? Are we below average?
That's a tough question.
It's a really tough question. It really varies dramatically across jurisdictions depending on the particular tax base of the community. Albany is, I would say, pretty middle of the road because it does have a fair amount of commercial activity. It's got a reasonable sales tax base. It's also very heavily property tax dependent. More residential communities that don't have nearly the sales tax base that Albany does are in much worse position. Property taxes are great. They're very stable for the most part, but they are very slow growing. Sales tax, much faster growing, much more volatile. Albany's sort of middle of the road. It's not just a residential community, so you don't just have property tax. I can speak to Clayton. Clayton was almost entirely property tax, very stable, super slow growing. But it doesn't have an Amazon distribution warehouse. I will tell you that is a huge deal from a sales tax perspective. So it's kind of middle of the road. It's not great. It's not horrible.
Yeah, and the numbers do support that. It's really middle of the road. And one of the key things that we look at from an audit standpoint is where that net position falls, because the larger portion of that net pension liability that you share, the larger the impact it has on your net position, right? And so when we look at Albany's net position and the makeup of it, the restricted, the unrestricted, and then the invested in capital assets, it's very similar to cities that are of similar size and that are participating in CalPERS. So that's one of the key kind of figures we look at.
And who exactly is it a team of people at your firm who do the auditors, or is there one lead person?
Well, there's 20 of us running around doing audits, but not all of us out here at Albany. So the team this year, we had about 5 people in total.
Working on Albany?
Working on Albany, yeah. There was a time when I started my firm 15 years ago that it was just me and my wife. That was easy.
I believe, did Chair Chair Trainer have some written questions, or was that not on this agenda item?
Is it an attachment?
No? Okay, maybe not.
It wasn't. She had some questions. We encouraged her to send them to the chair for this
Oh,
meeting
okay.
so that you could bring them forward. Typically, we wouldn't push those forward for
Okay.
someone who's not in the meeting, other than if it came through a committee member. But we've addressed some of the issues which had to do with pension liabilities and the finding and there was just, she did have a question about the 1.4 million in non-spendable reservation, essentially a fund balance in that general fund chart, which has to do with obligations that are in the future, but we have to recognize them now. So we have a fire engine in there, and those new subscription-based IT things that we have to account for GASB. But much of what she had questions on has been addressed already in your questions or in Sheldon's presentation.
Okay.
I got another one, sorry. I noticed that the police and fire expenses have gone down. Was that because of major acquisitions in one year that weren't there the next year? But it seems kind of unusual to have fire and police go down.
Well, Raina,
Artifact.
say it again?
It's an artifact of the pension, the way that we have to account for the pension liabilities. So it's entirely an artifact. Our operational spending for police and fire have not gone down by $1 million plus each of those departments. They've been more consistent or gone up a little bit. The way that the figures have to be presented under that government-wide financial statement is accounting noise, in my opinion. So I'm a budget person, right? Okay, accountants, auditors, I'm a budget person. You have a checking account and a savings account, right? Like normal thought process. Money comes in, money goes out. When you look at the government-wide statements, there's a bunch of accounting noise in there, and that's really what that difference is that you see in police and fire and to some degree in general government. It doesn't represent actual spending. Like, we didn't write $1 million in fewer checks to police and fire for police and fire expenses, but the way that we have to account for those liabilities changes the way that it looks. And I find that challenging every time I look at one of those.
So you're not,
That's what it's like for us.
you're not alone, because, you know, I do need to fund my career by creating these standards that everybody has to follow. Wait, no, I didn't create them, sorry. But no, the idea is that you're not the only ones. This city of Albany is not the only ones. We had another client that typically every year they're around $30 million in public safety expenditures. Do the adjustment in the conversion related to pensions for 2023, they had a $15 million decrease in the government-wide statements that they didn't have in their fund statements. It's purely from pension credits related to these weird investment underestimates, I think, in the CalPERS plan and overestimates. So they're not doing a great job of estimating where their investments are going to be, and that's what the problem was. And that's why you see these fluctuations, and that's what's led to your question. Yep.
Yeah, I think I noted something like a $4.4 million pension adjustment. Is that kind of what we're talking about? Yeah, so there's a $4.4 million pension adjustment in that fire and police expense.
Yep. And it's as of right now, it's not real money, as of right now. But at some point in time, it might be. I say might.
So,
Have you seen any cities that have come up with a plan to deal with the
Yeah.
pension liability, and what were those plans like?
So here's the biggest response has been, well, there's two responses. One is to put money in their own trust, right? A Section 115 trust, put money aside there, try to earn more interest on that and have that set aside, right? That's one way. So you try to throw money at it, right? The other way is you actually fund, pre-fund it, put more money into CalPERS. I don't recommend doing that because I've seen that backfire in the sense that you kind of lose it. You don't get dollar for dollar out of it, which is kind of interesting.
Say it again?
You don't get dollar for dollar. So if you put $10 million into CalPERS, you don't get $10 million back. It's just how their investment pool works and how their calculations work. So when they do their allocations, somehow, some way in the end, you lose a little bit of that money that you put in. Yeah. And they're audited, by the way, but it's got to be a difficult audit.
But I thought that there was some kind of, like, interest that you had to pay, like when they say, well, you have to pay 7% in
Yes.
of the total amount.
That's all part of it, yeah.
And so I thought that if you paid it down
Right.
by $1 million, and it was 7% interest, you'd be saving $70,000 a year.
Doesn't-
Plus that gets
Right.
increases over the years.
In theory, right. That's what I would say too, but that's not how it works. Yeah. You end up getting $55,000.
So it's better to then, could you explain just a little bit more?
Putting money into a Section 115 trust has been what some local governments have been doing. To say that it's better is difficult to say because it's case by case, right? And then again, you're investing money. So anytime you invest, you're risking money, right? So, but that is a solution that a lot of local governments have looked towards.
And it's more liquid in the sense that we could.
Right. You have more control.
Once you give it to CalPERS, it's gone. It's
gone.
But if we have it in a trust fund, we can take it out if we need.
You can use it for those contributions and to make contributions and to cover contributions. And it doesn't reduce the asset directly, but it does give you another asset that's set aside for that, and it's restricted. Yeah.
Thank you.
while we're on pensions, so I have a question on the Albany pension, not the one that's in CalPERS.
The fire?
Yeah,
Yeah.
it looked like there was a change in assumptions of $1.9 million. It's on page 76. And I'm just trying to figure out it's a large amount for the amount of liabilities and assets that are in that. Is that any idea what that?
Taking a look right now.
It's on page 76, it's in the single employer plan.
Are you looking at the table of the changes in the balances of the net pension liability?
Keep going,
Oh, perfect, thank you.
keep going.
Oh, yeah, it's actually 1.9 million changes of assumptions.
There you go.
Changes in assumptions,
There, that's
yeah.
it, $1.9 million changed in assumptions.
Yeah.
What changed and why?
So what we're gonna do there is, well, let me look at, there should be a disclosure in there in the required supplementary information. Let me pull that up. I believe it was the discount rate, but let me double check.
And not to be too morbid, it's either the discount rate or the mortality. Because that's a closed pension system, we get better and better information about what the likely life cycle is of those folks as that group gets smaller. And so there are some, the mortality assumptions can also make a difference in what that net liability is. So typically it's one of those two things.
It was the mortality rates. They changed. Yep, spot on. The discount rate did change, but only by about 1.25%, which would have a decent impact on it. So the combination of the change in the discount rate and then the mortality rate tables changed from 7 to a 10-year projected life, which would have a significant impact.
Okay.
Yeah.
And that's our plan. So who makes those changes? Is that we get an independent actuarial report?
Yep,
and they-
that's
okay.
correct.
So, and then my other question is about large assets. There was just a comment on page 30 that the city has no plan, essentially no money set aside to pay for replacing large assets. And I think we've talked about this on this committee before and about getting some sort of plan together on, replacing roofs and large assets and things like that. So I'm not sure this is an audit question. I just wanted to tag that and make sure I understood it right. And if I do, maybe that's something that we should have as a future agenda item.
Yeah, it looks more like a budget question to me.
That is something that I know our Public Works Department has been looking at a variety of mechanisms to address those large capital needs. So that's everything from, for example, the proposal in front of the council recently to extend our sidewalk tax. It's potentially, and I say potentially, looking at debt for a major infrastructure program. So I know that Public Works has been working on a number of avenues to address those large capital asset needs that are not really funded.
Okay.
So I know staff's working on it in Public Works right now, but it's a big lift because it's a big number.
Okay, so maybe when we talk about future agenda items, we can decide if that's something that we want to run through this committee as that evolves. Okay, any other questions about the audit? Okay, public comment? Yeah.
Thank you. Greg Bone, retiree from the police department. I had a question.
Come on up.
My only comment, but sure, thank you. Yeah, I had a question about page 95 on the ACFA report, and it talks about proportional share of the net pension liability, and it seems kind of some odd numbers here. And of course, I can't find it right now. 2021, it's showing 33,401,000. 21-22, that drops to 19,156,000, and then 22-23 back up to 37, almost $38 million. And it seemed that 19 million seemed an odd number in the sequence of numbers, and that was my question. Thank you.
Thank CalPERS and their 22% interest earnings in 1 year, followed by a 7% decrease in earnings, not decrease in earnings, pardon me, a 7% loss in the following year. And so that 22% increase in, or 22% return in that 1 year, everybody went, oh, hallelujah, you don't have that much net pension liability. And the next year was like, oh no, never mind, you really do. Is that a good
22,
explanation?
that was a great explanation. 22 is an outlier. That's what I was saying earlier. You have to look at if you look in the last 5 years, it's a really good idea, but we're at 9 years. And so if you look at the 9 years history, you're going to see all of a sudden that 22 drop, but everything else has a very, gradual increase in that liability.
Thank you. Any other questions from the public? Public comment? Nope. Okay. Thank you very much. Appreciate it.
Thank you. It's nice to be out in public again, right? COVID-19, just gotta say it.
Okay.
Aye.
So section 5.2 is the fiscal year 23-24 second quarter mid-year budget review.
Why, thank you, Chair and Committee. I have already done my introduction, so in my notes to myself, I no longer need to do that, but I am Raina Schwartz, your Interim Finance Director. The report before you this evening provides a brief update on the general fund at the halfway point of the fiscal year. As the committee is well aware, revenues and expenditures do not flow evenly across the course of a fiscal year. Although by halfway through the year, we have some evening out of that, but it is still not quite divided by 12, and I know this committee has had that conversation before in terms of the first quarter report that Cassie was able to present to you, and taking a real look at what does that look like over 3 months, 6 months, 9 months, and 12 months. Last year at this time, we were at about 48% of budget on revenues and about 54% of budget on expenditures. So we would expect to be a little less than half right now on revenues and a little more than half on expenditures. Some early season large expenditures like the CalPERS UAL and our insurance payments, those tend to boost up that first quarter. Revenues don't come in as evenly typically, and what we saw this year, we, as of the halfway point, had only received 5 months rather than 6 months of our sales tax revenues. It just typically comes on some delay, and then the state does a true up later in the year. So it's not surprising that we see our sales tax revenues not quite where we would expect at 50%, but are at a little bit less. Overall, other than that, our sales tax revenues look like they are more or less on track for this fiscal year. Once you take into account that 5 months instead of 6 months. The other large driver of lagging revenues is the fact that there is a significant component, you can see there 6%, is transfers in. So transfers in means that the general fund receives money from other funds in the city. The biggest single one of those is the pension tax override that goes into its own fund and that is transferred to pay for pension costs in the city, but because it doesn't get deposited in the general fund, it shows as a transfer in, and we don't typically make those transfers until later in the year. A number of our other funds also transfer monies into the general fund to cover administrative costs, et cetera. And so almost no transfers have been made yet this year, but we know that we will catch up on those at the end of the year. So we would expect to see our revenues lag completely in that area. That said, we are only at about 43% of revenues overall this year, where last year we were at about 48%. So some caution is warranted as we look at our overall revenue picture. If our revenues don't pick up in the second half of the year, we are more likely to potentially realize the deficit that was budgeted or shown in the adoption of the budget, or to have a larger deficit than we might have imagined. I think we don't know the answer to that yet. We are only 6 months in, but as the third quarter numbers come in and we get ready to bring those forward, I think we will be taking a good hard look at where we land, and we'll be talking about what that means for the rest of this fiscal year and for next fiscal year. I think, in fact, as we look toward next fiscal year, as a bit of a nasty preview, we do know that we will have sales tax revenue losses next year because of the closure of Golden Gate Fields, as well as the recent loss of the Kellymore paint store. If we don't get another large-ish business, I mean, Golden Gate Fields dwarfs everybody, but even so, Kellymore Paints, that was a significant loss for us. And so there's a real, in general, sales tax revenues are looking fairly soft in the Bay Area, in the state. just not very robust. When you couple that with the losses that we know that we will have local to Albany because of Golden Gate Fields and that Kelly Moore paint store, I think we can look ahead to FY25 and be concerned about where our sales tax revenues are going to be next year. And so again, as we get later into this fiscal year and we start talking about any adjustments that may need to be made for fiscal year 25, we will certainly be looking at those numbers going forward. On the expenditure side, in some ways, there's much better news. We are, in fact, slightly better than we would have expected for 6 months through the fiscal year. We're not quite at 54% as we were last year. We're at about 51% of budget in terms of expenditures. And departments are doing a good job of staying within their budgeted requirements. They are well aware of the information that we're presenting to you and will be presenting to the council later in this month. And so they know that the thought process is going to be heavy on not only looking at revenues going forward, but looking at expenditures. One thing I will say, 70%, as you know, of our budget is on the expenditure side is salaries. So savings in expenditures is in part the result of vacancies where they exist in the city in terms of staffing. It's sort of good news from a financial standpoint because it does generate savings in the budget. The downside of that, of course, is that it has service impacts. And, up to a certain point, staff is very good, and the staff in the city are very committed to doing everything they can to minimize those service impacts. But down the line, there's a balancing act to be had between vacancies allowing us to have salary savings and vacancies causing service constraints. And so, everything is a bit of a balancing act going forward, but we are going to have to look very closely at expenditures as we head toward FY25 as well, because of what we know is likely coming on the revenue side. I will say, just as an aside, since we just spent all that time talking about pensions, the estimate that we got from CalPERS last summer for what our FY25 costs will be for the payment on that unfunded liability goes up at about $500,000. And so that's built into the FY25 budget that you have in there now, which is great, but it does put pressure on the budget that is unlikely to get better from that particular source, and it is a large increase when you look at the potential impact in FY25. So the bottom line, as we look from budget to actual or actual to budget for halfway through the fiscal year, is I would say caution. The sky is not falling for sure. However, this is a good time for all of us, and staff has been working hard on this, to really evaluate our expenditures, to make sure that we understand that we are putting funds toward the most critical services and programs, and that we are managing those funds very cautiously going forward. And I do think that in May or June of this year, a report will come back that potentially looks at making any necessary adjustments to close this fiscal year, and then adjustments to that FY25 budget. So I've been talking to the other department heads as I've been here, and I fondly dubbed myself in the meeting yesterday when I was talking to them the Queen of Doom. So for those of you, since Reina means queen in Spanish, it's been my favorite part of I was the queen of trash for years in Sacramento, just to get everybody's mind. I was the solid waste manager for the city of Sacramento. But I was the Queen of Doom a bit on budget I really don't think it's doomsday, but it does require us, I think, to be extremely thoughtful going forward. So with that, I'm here as well as Cassie to answer any questions and provide any additional information we can.
Okay. Well, first of all, thank you for the staff report. It was very informative and gives good context to the financials. Any questions?
Yeah, I have a question. Starting last year, I think in July, there was an agreement that UC would fund the city, I think it was $400,000 a year over 10 years, and there was a stipulation that some of that was reserved for a specific purpose. So, but when I look at the revenues in the adopted budget, none of these numbers seem to be where that lands. So where does that money actually show up in our revenue stream?
It's a great question. I had that question myself when I was looking at it, and I finally just got it figured out this week, so excellent timing. There were two components to that UC agreement. One piece of it was a $200,000 a year for 10 years contribution toward additional fire equipment. That will sit by, it's not anywhere in here because it's going to sit in a reserve until it gets used to buy a fire truck, basically.
Goes directly to reserve. It doesn't go to the general fund at all.
The $200,000 does not go into the general fund. It is solely for the purpose of a fire truck. There was, in addition to that, $400,000 a year, which was does go into the general fund and is to be used for any services that essentially benefit the continued growth of the city as a result of the UC activities. The revenue, because of the timing on that agreement, the revenue for that agreement was not included on the budget side, but it has already been received on the actual side. Unfortunately, that makes what I was just talking about a little bit worse, in the sense that we're already a little behind on revenue, but we have revenue that we didn't anticipate in our budget that has already been received by the city. It's definitely a plus for the city to have that because we will have, increasing wear and tear and use on all of our services and programs as a result of UC activities. But we have received it for this year. It goes directly into the general fund. It's not held out for any specific or separated purpose.
So in the column that's titled Quarter 2 actuals through Quarter 2, where is it?
It is in other, where's my report? It's in other.
101.
It is.
4.
It's in other revenue. It's not in other revenue. It is in, it's not a transfer. It's in revenues from, no, why am I not finding it?
Well, I'm not finding it either. That's why I'm asking you.
It may be the transfer in then. I think you're right. That it's that 400 of the 439.
As a transfer in.
Yes, because it's considered
Okay.
from another entity. We'll have to, I think it'll probably get moved into a different category because I don't think that's where it belongs, but that's where it is.
Okay. Okay, thank you.
Thanks.
So I have a question. And when we set the budget this past year, and I don't want to rehash this entirely, I'm just interested in another perspective. We've been frequently budgeting deficits, and I just want to understand your perspective on the rationale for doing that. And it seems like we had never actually realized a deficit. Are we just budgeting a deficit so that there's no issue actually making those expenditures when we need to make them?
I can't really speak to what whether or not the rationale was that so we can at least make sure that we can make those expenditures. It is less common to hear the term, Cassie will note when I first got here, I was like, what is that? You don't typically hear a budgeted deficit. what you would more perhaps typically see is a more explicit acknowledgement that in order to balance, you've got your operating revenues and your operating expenses, and you show a deficit. Typically, then you would have the council make an explicit appropriation of reserves to cover that. And then if you don't need it, you don't make that expense, right? It operates effectively the exact same way as this budgeted deficit, but it highlights that you're concerned as a jurisdiction that you may not have operating revenues sufficient to meet your operating expenses. I think oftentimes jurisdictions will potentially budget revenues more conservatively, and that can lead to a similar situation where we're like, oh, we're going to budget conservatively. We think we might need one-time resources, reserves to plug that, and then it doesn't come to pass. I think in the last couple of years, coming out of COVID, the city here has bumped up their revenue estimates. They did a significant increase in the revenue estimate at midyear last year, and then we built the budget based on that, which is why I think we're probably getting closer to that point. And I think as we look toward FY25, and again, I'm only here for a short time, so, don't hold this against the next person. But, my recommendation would be that we take a more explicit approach to understanding what that means and whether we're truly talking about if we don't do something differently, we're going to need an appropriation of reserve monies. If you have to actually appropriate reserve monies to close a gap, that's a sign that you have a structural imbalance. Your income and your outgo are not lined up, and that's a red flag that you need to do something differently. So the city has shown that from a budgetary standpoint, but not at all realized it the last number of years. I think those lines are getting closer, and that ramps up the pressure to perhaps frame it a little bit differently so that those trade-offs are more explicit.
Super helpful.
Yes.
Yes.
Thank you.
Hopefully,
Sanity check.
the other folks will think it was helpful.
I have a quick question on the revenues. The thing that stands out is the transfers in, right? I mean, total revenue is short by 1.6, but 2.2 is transfers in. So if that were there, revenues would be better than expected. And then if you added in another month of sales, it would be even better. So I just really want to know about this transfers in. Is this just like an endless pool? Like, where does that money come from? And is it, you said it was pension money, but like, where is it coming from?
So one of the taxes that people in Albany have on their tax bill is a pension tax override, okay? So Prop 13, lots of nonsense about how property tax can and can't be raised in the state from way back when. So this pension tax override is basically a way that jurisdictions could, with these tax overrides, raise the property tax for a particular purpose, and so that's what that's for. Because of the way it's structured, it just doesn't go into the general fund. It's required to be in its own fund. So we say, yes, we're going to levy this. It's going to go for this purpose. It goes into its own fund, and then we pay all the pension costs out of the general fund. So we transfer it into the general fund. So it's like moving it from you ever had a Santa Saver account, right? You remember those, right? Like you put 25, anyway, you could only get it back in December, right? You could only take it out to buy Christmas presents. It's a bit the same. You can only pay for Christmas presents, pensions, but it has to go into its own account. And so that is the vast bulk of what that transfer in is. So it's not an unexpected source. It's not a surprise amount particularly. It's just that because of the way it's structured, we have to handle it as a transfer in rather than as a direct revenue. So regular property taxes, we just take into the general fund.
So that money's there, it's gonna be there, it'll
Right.
be there next year, right?
And while we would be better off, absolutely, on a percentage to budget basis, if we said, yes, we know we're gonna get these transfers, so we're gonna count them, that would have been true last year as well. And so when I compare 6 months of this year versus 6 months of last year, the fact that we were at 48% last year without those transfers, and we're at 43% this year without those transfers, essentially washes out that situation.
Right.
So it doesn't necessarily improve the outlook per se for this year. It's the same issue that existed. It's the same issue both years. So it's not a difference between the 2 years.
Yeah, okay.
And just to add that the transfers in, it's, with that in mind, it's a timing thing. It's kind of a closing thing we do, so we make sure that all of the transfers in are completed when we close fiscal year, which is, you'll see them in that report. That's when it'll be present.
Right, okay. Thank you. Any other questions?
Yeah. The pension override tax, I actually think I saw that on the tax bills that I was reviewing. And I always knew what the vector control for mosquitoes was, and the emergency one for ambulances, and the library tax. But excuse me, are you saying that that tax, which I believe we have, doesn't necessarily go towards pensions?
Yes, it absolutely does. So the pension tax override brings in $3-ish million a year, and our pension costs both UAL payment and the normal cost of retirement. So every time we pay employees, the employees pay a portion toward their PERS, and the city pays a portion toward PERS. It covers those costs. And so it all gets, I mean, we spend far more than $3 million in total on pension costs between the UAL, which in and of itself is almost $3 million, and then the what we call the normal cost of pensions, which is every time it's a percentage of payroll, right? So we just write a check to PERS for a percentage of payroll. I will point out, just for specificity, $500,000 of the pension tax override goes specifically to the closed pension fund for a portion of those, the closed pension fund. It's not all PERS costs. The rest is transferred into the general fund for PERS costs in general.
I thought you said it goes into the general fund, but it goes into the general fund and then they must use it for those.
They must use it for, I mean, we don't actually radio die those dollars and make them use those dollars, but yes, as long as the amount is that we spend on CalPERS and pensions is greater than the amount that we take in from that pension tax override, then we are essentially using those pension tax override dollars to pay the CalPERS costs.
The reason why I asked this question, because there are taxes like the sugar and beverage tax that we passed that, although specified for certain possible uses, are not necessarily used for that because it was set up in a way that it only needed 50% vote plus one, while if it was a tax that would require 2/3, then it would have to go dollar for dollar in. So do you know which one this is?
Okay, so to Raina's point, The pension costs far exceed the tax that we receive. So this is actually one of the easier transfers in that we complete because 100% of it is transferred from the fund that is earmarked for pensions and is held there to the general fund to replace the cost of paying the pensions all year. The other special revenues, things like sidewalks, open spaces, those other parcels that you see, those are also, it's a similar calculation. However, those ones are not necessarily in full used up in a fiscal year, so they're earmarked in a specific fund, and then you do the analysis to see how much was spent that would be able to be used by that restricted type of money. So that's the nature of the transfers in both for this, which again, the pension cost is higher than what the revenue we receive, so 100% of that is transferred into the general fund to recoup the cost of administering the pension plans, both CalPERS and the closed one. The other special revenues go through a similar process.
And to kind of, the last piece of that is the sugar sweetened beverage. You are correct. That was a general tax. That goes directly into the general fund and can be used for any general fund purpose, with the understanding that the voters really wanted to do certain kinds of things with that money, and that the council may choose to do that, or the council may choose to use it for other general fund purposes. The pension tax, if we couldn't substantiate that we were spending more than $3 million to CalPERS and the closed pension fund, we would not be able to transfer that into the general fund.
Gotcha. And this mid-year budget review is going to be presented to the council, and when?
March 18th?
Oh, their next meeting.
Your next meeting, yes.
And are you aware if there is any subcommittee on the city council that deals with any of these financial matters? So, and so the question to extrapolate is, do you just talk to them when you talk to them, or do you talk with the city administrator? But is there anyone on the council like that they're saying, well, we're going to be the budget people, and we're going to be the ones, because it'd be a member of two people that would do that? Are you aware of any?
I don't believe that Albany has a budget or a finance subcommittee of the council. The council as a whole acts as the budget and finance oversight. So all things go directly to the full council. There's no subcommittee involved. Some cities do have typically a standing committee that's a budget and fiscal standing committee of some sort. That's entirely at the discretion of every city council as to how they want to organize themselves. This council chooses to act as a whole body on financial matters.
There's no subcommittee on pensions, for instance, on the city council?
Nope.
Okay.
Okay, thank you. Any questions or comments from the public regarding the, nope, anything online? Nope.
I actually had one more question.
Oh, sorry, go ahead.
On the sales and use tax, I think you may have mentioned this, but we haven't collected the 6th month yet. We actually collect for that. Will we be on target compared to the estimated?
Yes.
Thanks. Okay, so let's go on to item 6.
Did we have public comment?
No, I asked, yeah. 6.1 Subcommittee update. So the first one is the Pension Subcommittee, which is myself and Chair Trainer. So I do not have an update on that, though we did receive some public comment for this meeting that touched on pension information. So we'll definitely be reviewing that before the next meeting. And we'll continue our analysis of the situation of the pensions. And, yeah, just to note again that the funding of the unfunded liability, the annual funding is going to increase, I think, about $400,000 or $500,000 every year for the next 5 years. So that's going to your point, put a strain on the budget, at least for the next 5 years. It's, I think, projected to flatten out, if not go down after that, but, you know.
I
That's a
pulled those,
projection.
please hold, I pulled those numbers because I knew somebody was going to ask me that. And yes, as of the most recent CalPERS estimates, the increase between FY24 and FY25 looks to be about the largest that we'll see over the next several years. However, every year, CalPERS recalculates that. And one more thing that I'll say on that is CalPERS keeps changing the rules, right? First, it was a 30-year amortization, then it was a 20-year amortization. First, it was a 5-year up ramp and a 2-year down ramp, or a 7-year up ramp and a 5-year down ramp. I mean, it's really hard to keep track of. So take the notion that maybe FY25 is the biggest single jump we'll see in the next several years with a great big grain of salt.
On a cheery note. Living up to your name. So on the next subcommittee, the Revenue Subcommittee, any?
So we are preparing to have a presentation next month regarding the tax bill, real estate tax revenue. And I will be presenting multiple examples of different bills from like Safeway and Target, were two that I've already pulled up, and then a single-family home that may have been, hasn't changed hands in a very, very long time, very, very long time. And then a single-family home of comparable size that is sold and has a much higher tax basis. I'm also would like to get some help from staff, if necessary, in order to get the kind of information regarding UC. The last times I've tried, the UC Village development, not the village, but the Sprouts development. It's been unclear what taxes that they pay and what taxes that they don't. And so I really want to find out about that. And I guess now I realize I should come up with some information about Golden Gate Fields. And then in terms of their parcel taxes. Because if it changes hands or is bought by a nonprofit, that could be a significant loss of revenue. Now, I also want to be able to compare how is it Prop G? Whatever we just passed. Measure G, thank you. Measure G should be changing the tax bills of of a lot of properties, in particular Target and Safeway, because it should be based on their square footage. And I noted when I pulled up their taxes regarding this as whatever they was replacing, that they were paying kind of the same that I was paying. And other individuals who own, whether it's a 700 square foot condo or a 2,000 square foot house. So there is a rather good positive projection for what that could bring in. So is that, and I'm not sure exactly when that would be starting. Do you know?
Was that a school measure?
Yeah.
That was a school district measure.
Right, I guess it's not going to affect us. Right. Thank you, Randy. Anyway,
I can answer that. The answer is 0.
so a question to the group here. Is there anything in particular, as I've given kind of an overview, you say, oh, how about this kind of source of revenue in terms of taxes?
I think you've talked in the past about a vacancy tax or something, I don't know what the right term is, but
Right.
something along those lines. Is that something that the city council or that you've followed up on?
I don't know how that might be done in terms of the tax bill, or how that would be levied. It's a good question. And have to,
To answer the question,
Yeah.
though, Mark, we did present it in June of '22, I believe, to the council at large, and they
Okay.
chose not to pursue it at this time.
Okay.
It was presented as both a commercial and a residential vacancy tax, and in the context of that moment, they were not interested. So
Well, in the context of this moment, it may be worth,
we could
Bringing
go there again.
I'm just saying, times have changed.
okay,
and,
that's a question.
know.
So any other kind of thing like that, or specific parcel, a model that you'd want me to share and examine and compare with others? I know I also want to do a multi-unit building, a 10-unit building, which is not particularly big, but we do have some much larger size buildings than that, but I think that's kind of potentially a good average size multi-unit residential building.
Sounds good. Thank you. Okay, let's go on to the dashboard metrics.
All right, the update here is when we last met in December, we passed a resolution to send a memo to the council suggesting that we adopt the KPI dashboard. There were a few developments since then that I've discussed with Raina and Cassie. One being the California State Auditor has since pulled the metrics for local municipality risk that they were publishing on the website. So we had a number of KPIs on the dashboard that were essentially benchmarking Albany to peer cities on an annual basis. Without that source of information, we don't really have a way to do that. And then with regards to the quarterly metrics, which were mostly structured around the budget, I think actually staff and probably most notably Cassie, I think, has done a great job incorporating some of the components of the dashboard that we were looking to incorporate into a KPI report. So what I discussed with them was, in the spirit of not creating additional work and adding on an additional report, was thinking about how we can compare anything else that was in that KPI report that's still missing or like not coming through, and provide suggestions as we go on to the next iteration about how to incorporate things to essentially make them more transparent. I made a few notes in the most recent rendition of items that I thought could be improved or highlighted more explicitly, but honestly, there wasn't a lot from a quarterly perspective. So I think kudos to you for some really nice work there. Like the comparisons to the estimated budgets, for instance, I don't think we had been doing that, and that's been super helpful to track as we're reviewing like how the city stands through the second quarter, for instance. So before I get into the specific suggestions that I saw for this quarter, just wanted to see if the rest of the committee had comments on the KPI report.
Any other?
So what's the status of actually getting this? Is it that it's been kind of included with stuff that Cassie does already? Or are we going to have, do you think that it's still something to pursue?
So I think the updates to the quarterly staff report on the budget actually covers a lot of what we were proposing, 90% of it on a quarterly basis. I think the opportunity going forward is how to make some of those points potentially more transparent or more explicit so that they pop out rather than creating another document. And then there were a few items that we were tracking on an annual basis, such as like the general fund reserve, general fund reserve, month's reserves on hand versus target, the capital fund reserve, the UAL, and the forecast, and the bond rating. Those things I think we can talk about putting in. I think there's an annual report, right?
Year-end, I think, putting it as like the year-end final report. Yeah.
Putting them in there as explicit line items, I think, could be the approach, rather than, again, creating something new. It's just taking what we already have and elevating and highlighting these things as they're in there.
Right.
Thank you, and
Yeah.
thank you, Cassie.
Yeah, thank you. So for me, just a couple things. One is, I do find myself doing sort of mental gymnastics still, you know, like with this whole thing with the transfers in and the, you know, sales or whatever. So if there's just some way to just show an adjusted number so I don't have to do the math and make sure that I'm doing it right. Do you know what I mean? That say, well, really this is on a really solid basis, this is how we're doing compared to budget. If you got rid of these sort of accounting issues, timing issues, I guess, maybe a better way to say it. That would be helpful, because I found like I had to be adding things in and dividing by 5 and da, da, da. Like you asked, are we okay on sales? You know, but given that it's only 5 months, that would just be helpful, just to kind of have a bottom line.
I think there's a really good way for us to address that.
Yeah.
Probably not in year for the first quarter of each year, but probably by the second quarter and third, and then obviously your year end. But for the second and third quarter reports, one of the things that we had talked about, but just didn't get to this time, is to do a projected year end, which does all the math for you.
Totally.
Right? So staff says, okay, we're here, we'll do the math, we'll do the pluses and minuses and divides and multiplies, and we think we're going to be more or less on target. We think we're not going to be on target, which would give you that easier transparency toward where, because really it's like what you really care about is where we're going to be at the end of the year. Like, are we going to be in trouble? And so that's something that we had talked about, and that I think we can certainly incorporate, and would be quite useful in that regard, to help elevate that, as Kyle said. So.
Okay, that's perfect. I had another comment, but that would take care, that projected year end would take care of that comment too, so.
If we're talking about specific items, I think the biggest one that I saw, which is kind of similar to Mark's point, is, I don't know if you can pull up the budget report and go to page 4.
And I agree.
So what I was going to say is to add percentages. I'm interested in your comment now too. Add percentages of how our actuals are comparing to the estimated. And also,
Oh, sorry, this is the actual.
Page 4.
the report, the staff report.
Staff report.
Oh, that's it.
Yes.
So we have an estimated budget, which I think is just based off of last year. Is that right? And then the actuals, and we have the variance. I think it could be helpful to just add a column after actuals with the percentage of actuals through estimated. So the first one, property tax, would be over 100%. It just helps put these things into proportion and then easily reference them. And then the other question I had here is with the estimated, are we just going explicitly based off of last year and all its nuances, or are we also massaging that a little bit to suggest that we're taking into account what's going on in 2024 and coming up with an estimated number? Because I feel like that might be the best approach.
That ends up being a somewhat similar outcome to doing the projected year end, right? Because it would wash out that 5 months of sales tax. It would allow, rather than saying, okay, it was 48% last year, and Cassie and I talked about this as well, it's, should that sales tax number have just been the estimated budget being written down to be 5 months, and then you don't have a variance because you are exactly where you expect to be after 5 months because you only got 5 months. And so, we can play a little bit with, like, what do we have in that budget column? And how does that get calculated? Is it solely based on last year, or is it some other calculation, or some other set of adjustments? We'll have to think about the best way to do that, and it may be that projected year end that ends up being the cleanest way to do it, because otherwise you get this sort of list of like, well, it's not exactly what it was last year because it's this thing and that thing and this thing and that thing. And I want to avoid a big list of why we made certain adjustments if we can keep it to just those that are most relevant. So we'll have to think about kind of how that is. But yes, we could absolutely refine the estimated budget
I guess what I'm thinking about
column.
is, like, transfers in next year, or the estimated is going to be super low if we just take this year as the baseline, because of some like one-off circumstance. So trying to figure out how to adjust for that, whether it's in the estimated line or in the projected year-end line. I think, to your point, both could be successful. Yeah, and then I'm interested in what you thought I was going to say.
You'll just have to see next quarter when it comes out better. It had to do with the chart below it.
With the chart buildup?
The chart below, which is just, a better way to deal with that, whether it's against budget or against last year or some such something or other that makes that more, gives you some sense of the relative value of those numbers rather than just plain numbers, which don't tell you as much if you don't know what you're comparing them against. And I think somebody asked me, somebody on staff asked me that before. So I'm like, I don't have time for that now. So I was not going to be surprised if you said that.
And then the other thing that we talked about was on the KPI dashboard, we had these ratings, essentially, the red, yellow, green on the first page. Ultimately, we decided it should come from the FAC in terms of budget, pension, general fund, and capital reserves. The one thing Raina brought up is in the budget report, they can have a section for comments from the Financial Advisory Committee. And I would put it upon us in the meeting, like the meeting that we just had, to explicitly think about our point of view or perspective on each of those things so that they can be recorded into the report. And then if we take it upon ourselves, I understand that we can also create a separate memo, or we could vote to have a resolution for a memo on top of the report as like a supplemental message that we could send to council if we wanted to do something like that.
I like that. I'm writing that down as potential future agenda item Because that's more than just a committee update. That's something we'll have to really talk about. What are the criteria that we think should be?
Yeah, what's the main takeaway the financial advisory
Yeah.
financial advisory committee wants to send on budget? And then maybe at year end, it's the pension and the general fund and the capital reserves.
Okay. Great.
So you just reminded me, so we had no comment on the audit. It's kind of the first time we've had, when we've had the audit in such a way that we knew that it would be presented to the council, in 2 weeks. And it is kind of our role to advise them about what we thought was significant about the audit. That was a past agenda item. I kind of, we discussed quite a few things about our concerns about the budget and the unfunded actuarial liability, but it's just amongst the four of us. So none of that is necessarily going to go to the council unless Raina takes it there for us individually, but not as a group.
We will include in the report, so the staff report that goes to the city council will have a section that's, says FAC, and will essentially summarize any, major points. The FAC asked, Cassie's been taking notes, I have not been, so, but, we'll highlight the major points of the discussion that the FAC had, and, going forward for whether it's these quarterly reports, et cetera, if there are more specific items, we can capture those. And essentially, rather than waiting for your minutes to come back at the next meeting, we will just pull the bullet points from the discussion and ensure that the council has visibility to those in the staff report that then goes to the city council. So there'll be a section in the city council, just as there was on the debt policy.
Well, I think you obviously are listening to our thoughts and concerns, but in the past, they may not have been regularly translated and communicated to the council. And even if we had, for instance, the council is going to approve the audit at their next meeting?
The council doesn't approve the audit, the council accepts the audit. That's the role of the council. There's no approving or not approving. The audit is what the audit is. The audit is done. It's done as an independent review, and the council accepts the audit. The council can then turn around and direct the manager to do whatever they want the manager to do about the audit, or any follow-up on the audit, but the formal action is simply to accept the audit.
So if we had found something in the audit glaringly deficient, then we could then have, I'm just making up a hypothetical, that we'd recommend to the council that they don't accept the audit and send it back for revision because of A, B, C, and D. Does that ever happen in your experience?
I think, as Sheldon said, it is extremely rare. It's extremely rare that something goes back to the auditor. It's much more likely that I've been, in my experience, that a council will then direct the city manager to do something in response to the audit itself, rather than going back and asking anything related, rather than going back to the auditor per se.
So Yeah, I'm just trying to, I'm struggling to, I think it's a great point. I wish I'd facilitated this conversation when we were in that agenda item. So can we talk about this under future agenda items? But it's before the next meeting. I mean, I think where we're going is we want to somehow be able to convey, either individually or as a group, letter, so to speak, to the council, something about the audit. Is that right?
Yeah, and/or the budget, you know.
And/or the,
We
right,
had all those
the
things.
finances, right?
Yeah,
So, I don't know what the right,
I think, Mark, the way I would handle it is, I know Cassie has been taking good notes, and what I'm going to do is I'm going to look at the report that you're going to submit, and if you captured what I think Finance Advisory Committee's, the content of our conversation this evening, great, I don't need to say anything more. But if I think there was something that was left out, I can't speak as the entire commission, but I can speak as an individual who participated in the meeting, and I can then bring that to council. And that's what I would do. I mean, that's just how I practice, what I'm up to, so.
okay, thank you.
And I think as this is evolving, you know, we can continue to refine that process of, you know, did we capture everything, or is there some other action that the committee wants to take to authorize a memo, or, you know, whatever that outcome is. One of the other things we also talked to Kyle about is that we are going to try to turn these around fairly quickly between something like this, where you've got the audit or the quarterly report, to turn it around so that council also receives it in a timely fashion. And so making sure that we capture whatever the most important is, or that you have some other mechanism to do that quickly as a group, because you know, we will, you know, within, what is today? So by next Thursday, we'll be publishing the agenda for the 18th. So we also want to try to get on a more timely schedule for how we're handling those things. So I think it's going to take a little balancing out, but I appreciate the comment that you feel like we're listening, because we are, and that, you know, there's a desire to work collaboratively to try and find the most streamlined way to get your information across, but also always allowing for that opportunity for the committee to take a stand on their own, if you will, if you need to.
Okay.
So it's like, where's the right balance on that?
I think it's just helpful to know anytime there's some sort of report going to the council, if there's room for a section that talks about what the FAC discussion was, then we could potentially take a vote on a statement or something that we explicitly want to add. And the themes that we had talked about for the KPI report were budget, pension, general fund, capital reserves. And I would add to that whatever the topic is that the report is on. Generally, if it's the audit or something else, that could be explicitly what we're commenting on. Those are like the themes that we could hold ourselves accountable for, like reviewing each quarter or each annual report that goes through.
Right. Okay. That's a good idea. Okay, thank you. Any public comment on the subcommittee updates? Nope. Anything online? Nope. Okay, selection of a new chair and vice chair, section 6.2. Apparently it's that time. I'm sorry, what?
I mean, that would be the standard process at this point. For you to do it, you don't have to
We
do it.
don't have to do it, and the chair is not here to resist.
And I will say she did also wanted to nominate someone, and she did give a note to do so. So
Well, in anticipation of what she might or might not have said, I'd like to nominate Mark as the chair for next year and Kyle Bowman as a co-chair for next year.
Yes, Kim,
Can we do them separately?
yeah, we have to do them separately, I believe. So,
I second that.
yeah, Chair Trainer did also want to nominate Mark, and she wanted me to announce that she's nominating regardless of if there was another one, so.
Do you accept?
Does it have to be a vote? Okay, so we have a vote.
A second, yeah.
All in favor, say aye. Can
Aye.
I abstain? I'm abstaining.
I would say, I think we need to vote one by one, though,
Okay.
just to be official, so. So Kerr motion. Okay, so Member Bowman?
Aye.
Kerr?
Yes.
Member Papalia?
Yes.
Motion passes. Chair Priven.
There you go. I say, do I have a motion on the vice chair?
I'd like to nominate Kyle Bowman as the vice chair.
I'll second that.
All right, Member Bowman?
Yes.
Member Kerr?
Yes.
Member Priven, or Chair Priven, I guess, and Member Papalia. Okay, passes.
Okay. I'm afraid to ask for the public to comment on that vote. Yes, any comment? Okay. Any comment online? Okay, so the very last thing is the future agenda items. So I wrote down a few things. One is the subcommittee on revenue. So is that going to be the next meeting that you want to give? Okay, and we can talk about how much time you want for that. Another thing is, so the KPI, should we do that next month, or in terms of like getting the criteria together and that kind of stuff, or?
What are you referring to?
Sort of, you said that the committee we ought to come up with criteria for what's green, yellow, red, and, right?
Oh, no, just to be clear, I was referring to essentially having those items as like the themes that we're commenting on
Right?
for inclusion in that section of the staff report that goes to council. And we could come up with a rating system as one way to do that.
Okay,
Or we could come up with a statement. So,
okay.
I mean, I liked Raina's, I can't remember the phrasing that you used today, but caution is warranted, but otherwise like good. Something
Right.
that could be like the statement on the budget. I don't know that it needs to be boiled down into a color.
Okay.
If it's going into that comments section, but we could very well come up with our own rating system.
Call it the Queen of Doom.
Okay, so let's put that on hold, maybe for another meeting, and decide if we're gonna.
Yeah, maybe if
Well,
we're
if we
commenting
like
on
just
the
the-
next budget,
Uh-huh.
we could decide if we want to color code it, like green, yellow, red, or just
Right.
make a statement.
Okay, and then, so that brings up the question of the budget. So what's the timing of the budget? Is that something that we would be talking about at the next meeting?
So we have some tentative items just to put out as well. We were thinking not only April have a property tax presentation,
Okay.
but we also thought to have GovInvest come and give a UAL update to the committee. In May, we were looking at the quarter three review. And we thought potentially June would be the investment update, but we might go back on that with PFMAM. They think it might be better to do it later to get a full year of investing, so we might table that. And then quarter four, we're aiming for September, was kind of the tentative thought.
Okay. And so wait,
May would also be potentially a preview of any FY '25 adjustments. Because of the biennial budget, there's not a major budget presentation that will occur either to this committee or to the council, because the council doesn't have to go through the entire process, but likely May or June, there will be a presentation to the FAC and then the council on recommended adjustments to the FY25, since it's already been approved, yes.
Okay. So then budget is not for April? So for April, we have the revenue subcommittee, potentially property tax, or is that?
That's the
the
one,
same.
yeah, the property tax presentation from Member Papalia and Member Kerr. Yeah. Yeah.
And then UAL
Yeah,
would also be April.
that was it. So if there's additional items or consensus, then we can talk.
Any additional items?
I don't know if this, I'm just thought of this as, since there is no revenue subcommittee on the city council, perhaps we might pick a time where each of us might talk with who appointed us, and then have just come to them and say, you know, we're going to have, there's an agenda item where we're going to be presenting finance committee ideas specifically from our, those that have appointed us. And that, because I don't know if, I haven't had a conversation with John Mickey about this in a while, in a very long time.
Okay.
So, I mean, I just,
So between now and the next meeting, we're encouraged to talk to,
well, no, if there was going to be a, you know, an update, whether it would be, we could do it the next time. I'm just saying that there could be a future agenda item, doesn't have to be the next agenda, next meeting, but that we, you know, attempt to get input from the city council about where they think we, you know, and if anything's come up that they want to,
oh, okay,
that they've been thinking about, whether it's
okay,
revenue resources or hiring practices or anything
okay.
that they can, you know, otherwise we're just kind of talking amongst ourselves. But, I mean, it also gives each of us a reason and opportunity to talk to a council member and bring that back to us.
Okay, good idea. And the other thing that I wrote down is the replacement of large assets. If we could put that on some future agenda, it doesn't have to be April, but how that's going to work. And I believe that is it. Anything else for the good of the order, so to speak? Okay. We are adjourned.
Well done. 9:05.
Thank you, committee.
Thank you, Rena. This was very much so. I appreciate your input and Cassie's listening to us and incorporating what we've been talking about into the reports a lot. I appreciate that a lot.